Disclosure of tax positions. Now, we talked about frivolous positions before, and now we're going to dive into that further. These are various situations in which you should know. You could see multiple choice questions. I'd say Sims, but Sims are going to very much deal with mathematical based questions, dealing with all that good stuff when it comes to corporations, basis, gains, losses, flow through, all that good stuff. Now, in the big old beautiful United States, taxpayers are expected to accurately report their income and deductions. I didn't know that. That's the first time I'm seeing that right there. That's wow. That's not. I need to go fix my taxes. I'll be right back. Different tax positions have varying levels of support or authority, which can impact the likelihood of penalties being assessed by the IRS in case of an audit or disagreement. We've got a brief overview of the tax positions mentioned. These are the tax positions that you need to know. First off, a frivolous return. This is just straight up absolutely wrong. Like, this is the worst of the worst. It gets progressively more substantiated, progressively better, more secure. First off, a frivolous return. It's one that lacks any merit at all. It's got no basis in tax law. Completely ridiculous. Just get out of here. Why'd you do this? Just go away. Goodbye. It's often filed to deliberately avoid paying taxes. Taxpayers who file frivolous returns can face civil and criminal penalties, including fines and imprisonment. Don't do that. Don't do a frivolous return. Next up, we've got the no defense, which is essentially less than 20% chance of it passing the IRS. This tax position has very little or no basis in tax law, and the chances of successfully defending it are less than 20%. It's considered a weak position, and taxpayers taking such a position could face penalties. Next up, we have the reasonable basis standard, a tax position with a reasonable basis that has more than a 20% likelihood. So we have 0 to 20. This is, let's say, negative here. I mean, that's pretty bad. This has more than a 20% likelihood of being sustained upon examination by the IRS. It's a higher standard than a position with no defense. So these in blue, these terms are what you could see on the exam as well. These are the key terms. If a taxpayer discloses the position on their tax return, and it meets a reasonable basis standard, they can avoid negligence penalties and the substantial understatement penalty. So we see that if you fall into one of these categories, it gets better and better. Even if you're wrong, right? Even if you're wrong, and let's say you fall into the best category, you're wrong and you still have to pay the taxes on it, but you're not going to be hit with penalties because you did your due diligence. And essentially, how do you get higher up in these rankings? You do more due diligence. Maybe you communicate with the IRS. You ask them what's the likelihood of this passing, your rules and passing an audit, right? That's kind of how this works. And throughout the exam, we talk about too the fact that you can get letters from the IRS to substantiate what you're going to do before you do it. So reasonable basis standard. Now we're getting into better territory. We're getting a little bit more positive. Next up, we've got substantial authority. A tax position that has substantial authority, it's more robust with a likelihood of being sustained between 33% and 50%. Taxpayers who take positions that meet the substantial authority standard can avoid substantial underpayment penalties, even if the position is not disclosed on the return. And then last, this is the best one. You want to fall into this category. The more likely than not standard, a tax position with this standard has a greater than 50% chance of being sustained upon examination by the IRS. Now, this is a strong tax position, and the taxpayers who meet the standard generally avoid both negligence and substantial underpayment penalties. Now, how does this play into everything? First off, I would just kind of memorize, be familiar with this. Now, you can go to the IRS, you can go to a tax lawyer, you can go to a CPA and ask them, hey, I want to do this in my taxes. Where does that fall? And they could probably give you an idea in which of these buckets will that fall. They say, this is probably falls within reasonable basis. Right? Maybe it's got more than a 20% likelihood, but maybe less than 33%. So that's where this comes into play. First off, I would just know this, be familiar with it. They could take this in varying ways. All right, we got an example here of disclosure of tax positions. We got James Marsh, who is an individual taxpayer residing in Pinellas, Florida. He has been accused of underreporting the tax on one of his returns and is anxious, as anyone would be, about the possibility of incarceration. I mean, yeah, wow, that would cause some anxiety. If found guilty, the underreporting is not connected to any tax shelter activities. Now, why is that important? A tax shelter is essentially, you could say, tax avoidance. You're trying to hide that. So that would immediately kind of put us at some sort of frivolous position. If James consulted with a trustworthy accountant or attorney who prepared his return and supplied all pertinent information, generally he would have a reasonable basis for the tax return position and could avoid the penalties for underreporting tax. So we see how this is starting to come into play. If you do a significant amount of work, like how can we bolster our position? Now, if James took a reasonable position on his tax return, he is subject to the penalty for underreporting tax and not to the penalty for substantial underreporting tax. Now, both would not be applied simultaneously. The specific penalty that would apply would depend on the amount of the underreporting of tax. So we see, again, like I said, as you climb the ladder, as you get to a better tax position, you avoid more and more of the penalties. Now, if there was a reasonable basis for a disclosed tax position on the tax return, and James acted in good faith, the penalty for underreporting tax would not apply. If James actually did underreport his tax, he would still be responsible for the unpaid tax and any interest, but he would not be liable for the penalty. And, it's like based within the rules of the tax code, that's pretty fair. If the tax code's operating properly, yeah, you would be liable for the unpaid tax, and then, interest would apply because whether it's the IRS or an individual or a company, everyone wants their money now, and if they don't get their money now, they want interest on it. In the event that James's underreporting of tax is a substantial underreporting, the penalty would be the same percentage as for a simple underreporting. But here, great example of how we could kind of play those rules into a question. And here we go. This is a nice recap on the disclosure of our tax positions. Take a look at it. We'll put it in the memorization guide, but great way to memorize it in a more simple format. Gotta love it. You're doing great. Make sure you're stretching, going out for a walk as you need to. Take your eyes away from the screen. Go have a smoothie. Do whatever is best for you. Drink water. That's another important one. We're powering through. We are having a good time while doing it. Let's keep moving along.
Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.